Welcome to Classic Value Investors and Microcap Explosions. My name is Mariusz Konieczny. Today I want to talk about investing versus trading. I'm sure if you're an investor, you had conversations with some of your friends and they ask you, what do you do? And you would say, I invest. And then they'll say something like, oh, day trading. And so many times I get this kind of question. So I thought it would be interesting to address the difference. So in general, I think people are confused about what's the difference between investing in and trading. And some people think that they are investing, but really they're trading. So they don't know the difference. So let's talk about this. In general, trading is something that you do short term, investing is long term. But that's really not a good explanation. So let's say you have something like an orange or a tomato, right? And people trade all kinds of things. They trade cars, they trade stocks, they trade options, they trade commodities, they trade all kinds of things. So let's say I buy an orange. I buy an orange for $2, and I want to resell it for $3. Well, that's going to be very difficult to do unless I do something to this orange, right? In other words, trading is what trading is buying something and then reselling it at a higher price, okay? And a lot of people are attracted to this, and I'm not going to criticize those people for this, but I don't get involved in trading because trading to me is too hard, and too many people are attracted to it. And here's what I mean again. People want to buy something for $2 and resell it for $4 and make a profit. And you have to just take a step back and think about this for a second. Why would you be able to do that? Why would you be able to buy a fucking orange for $2 and resell it for $4 without adding any value to it? It's very difficult. Yet so many people are attracted to it. In other words, they don't want to do anything and they just want to make a profit for free. And that's why so many people are attracted to it. So now, but you have certain instances where, like Walmart can buy something like this for $2 and then resell it for $6. Walmart can do that. And you might say, well, Walmart doesn't add any value. Yes, it does. Walmart does add value because the value that Walmart adds to a product is convenience, right? Instead of you getting in a line waiting for it to be shipped, you can go to the store or 7-Eleven or whatever and conveniently pick up the product. So they are adding value to a product, and that's why they can resell it for a higher price. If you are a restaurant and you take an orange and you turn the orange into a salad or some kind of meal, you are selling that orange for a higher price because you are adding value. You are adding value to that, right? So again, trading is just taking something, not doing anything to it, and hoping to resell it for a higher price. And that's why when people are trading, whether it's stocks or options or whatever, they are making very little tiny margins, because what they're doing is they're buying something and looking at charts and all this kind of stuff and trying to predict that maybe 5 minutes later or a week later there's going to be more demand for the same product and people are going to pay you more for the product even though you didn't do anything to it to improve that product. Now on the other side, if you have something like a bottle, for example, and it consists of plastic, right? So if you are in the business of manufacturing bottles, right? What is it that you're doing? Well, you're buying plastic pigments, right? You are probably you have a plastic injection mold machine, and you turn plastic into something useful, right? So you would expect that the cost of your raw materials are going to be less to what you sell this thing for at the end of the day. And the difference is the profit. And by you are adding value you are adding value to the raw material that you purchased. You might have to have some labor included in it. But at the end of the day, you're making something useful out of it, and therefore you can make a profit. And it's absolutely normal for any sort of businesses to have very nice margins and double their money on or more on particular products because they are adding value. It's not about trading, it's about adding value. Now, when we are talking about businesses, because we're here talking about stocks, when you buy something on Monday and you expect to sell it for double the price the next day, that's kind of naive, okay? Unless something major happens within that few days that would make the stock be re-rated. But in general, when you are buying something, on Monday, and if you try to resell it on Wednesday, you're trading, because really the company didn't really change within 3 days. It takes time for companies to change. So how can companies add value? Well, like if you look at something like Oracle, when they solved the legal problems, they added value, right? They removed risk, and therefore the company became more profitable, and therefore the stock over time adjusted to that reality. But from day to day, the value of Santa Thomas, the value of Oracle is the same. Now, when we're looking at regular companies, how can they add value? Well, over time, a company can bring on more customers, right? It can serve more customers, can expand in other areas, and it is becoming more valuable to you as an owner. So the reason why I don't trade is because I want to be involved in businesses that can add value over time. And when I'm looking at businesses, what are they going to be in 3, 4, 5 years from now? I have a lot less competition, because people are not interested in waiting for 5 years. Right now, like the average period that hedge funds or institutions or even people hold a particular stock is months. So how much can a particular business change in 3 months? Not much. So they're pretty much just trading and trading dirty shirts with each other, right? But now, if I have an investment horizon that's 3 to 5 years, then I barely have any competition. No one is interested in waiting so long. No one is interested and have the patience to wait for the value to get built up. They are interested in how these things trade from quarter to quarter, because every quarter they compare themselves into other hedge funds and how they're doing against the market. So in general, trading and investing are completely different things. I'm interested in investing because, to me, it is so much easier to make money investing, simply because there's no competition. And it's so hard to make money trading because you as a human, you're competing with other firms that have so much money into computing power, and they can outsmart you any day. I have a friend that is a computer programmer for trading firms, and I mean they put tremendous amounts of resources. They even move their buildings as close to the exchanges as possible so that they can get a faster connection and faster trade execution. And you as an individual investor sitting at home and day trading, I'm not saying it's impossible, but I'm saying it's a lot of work and you have a lot of competition to get an edge. But when it comes to long-term investing, you barely have any competition. And then when you go even lower to like microcap companies, like there's no one there. It's like you can pick companies that are like almost 90% certainty that they're going to double, triple, quadruple, as long as you have patience to wait years instead of months. And in my book, I will take those kinds of odds any day. So thanks for watching. That's the difference between trading and investing. And yeah, that's it for today.